Hey guys, what's up? Alec back with the daily stock market, and look at that, a fairly red day in the stock market overall. And the question everyone's asking right now, can earnings week save the stock market and propel it back to new all-time highs? Needless to say, this is one of the busiest days in all of the earnings season going on. We have Verizon reporting, Microsoft, Google, Snapchat, Visa, AT&T, Chipotle. We have Coca-Cola, Meta, Facebook, Royal, McDonald's, Ford, Enphase Energy. We have ExxonMobil, Procter & Gamble, Chevron, and many, many more. If you zoom in, you can see when the stocks are reported. We even have Domino's before the open on Monday. Before the open, we have Verizon, GM, 3M, GE, Spotify. After the close, we also have Visa, Teladoc, but the big ones that everyone's going to be looking over are Microsoft and Google reporting Tuesday after the close. All right, now Wednesday before the open, we also have AT&T, Boeing, Coca-Cola, Tilray, ADP, Union Pacific, but people are really going to focus Wednesday after the close on Facebook or Meta. All right. So they are a very interesting stock to be looking over right now. We're going to be deep diving into Meta in this video on earnings. So make sure you stay throughout the entire video so you don't miss the Meta update. Thursday before they open, Royal, McDonald's, Southwest, another airline. MasterCard is reporting. Remember, we have Visa reporting Tuesday after the close, and then MasterCard Thursday before the open. So that might give some insights. Visa might give some insights on MasterCard's earnings. Valero is also reporting, another gas company. Honeywell, Thursday after the close. We have Enphase, Ford, Intel, Roku, T-Mobile, Skechers. So there's so many companies reporting right now. I think there was a statistic where it said over half of the S&P 500 stocks in weight, compared to their market cap, are reporting just this 1 week alone. Friday, we also have Exxon, PG, Chevron, Charter, and some other stocks that aren't as important as the top three there. So the first stock that we're going to be talking about is Microsoft at $344 per share. In the past week, they really haven't done much, but on July 18th, you can see they shot up around 5%. And that could have been hype due to the earnings announcement going on and the pre-building of hype going on towards this announcement. But we can see in the last 3 months, they're up 22%. And if you compare that to stocks like Meta, Tesla, and Nvidia, Microsoft nearly hasn't flown as high as some of those other big tech stocks. So is this the chance? Is this the moment we're waiting on for Microsoft earnings to come out and blow us all away? Also, in the past year, they really haven't gone up as much as some of those other high flyers, only up 30% in the past year. Now, if we go to a 5-year chart, it is interesting because what do we see if we go to 2021 on November 19th? We can see that the all-time high was set at that time, and it was around $343 per share. And that's a strong resistance, an all-time high. We're testing that resistance right now. At current day, it's $344 per share. So will earnings propel Microsoft to new all-time highs, $350 per share, $375 per share? Or will it bounce off the resistance and go lower, back down to around $325 or even $300 per share once again? And here is an overall article that was pretty good. It says Fed decision, big tech earnings highlight the busiest week of the summer. The busiest week of the summer on Wall Street has arrived. More than 150 of the S&P 500 companies are set to report their quarterly results in the week ahead, headlined by Microsoft, Google, and Meta, obviously. Admin, this rush, the Federal Reserve will announce its latest policy decision on Wednesday afternoon and is expected to announce another 0.25 increase in its benchmark interest rate. It will also keep investors busy with the first read of the second quarter GDP, 2 looks at consumer confidence, inflation data, and the initial look at manufacturing activity in July, all on the schedule. Extremely busy week as you can see. The NASDAQ was dragged down last week by the results from Netflix and Tesla that prompted investors to pare their exposure to two of its year tech high flyers. Whether this pattern continues to play out during earnings season will be on this week's key storylines for investors. Because obviously the results coming from Microsoft, Meta, and Google can propel the stock market as a whole higher, or it could actually drag the stock market as a whole down. So keep an eye out for that. So here's an interesting article that I found for you guys. It says, is Microsoft a buy, sell, or fairly valued ahead of earnings? Focus on areas include Azure growth, discussions of AI, and the impact of layoffs. Okay, we can see Microsoft at a glance. Fair value estimate around $325 per share. Morningstar rating 3 stars. We can see that the moat is wide, and we can see the uncertainty is also a medium. But what I really want to focus on is what to watch out for in Microsoft's Q4 earnings. Azure growth. Azure is the key growth driver for the company. We believe its growth has been decelerating meaningfully in the past several quarters as customers are taking the time to make sure they are maximizing their contracts during macro uncertainty. Discussion of AI is something also to be watching out for. It's been a hot topic lately with clients and headlines. We look for any discussion around OpenAI because remember, they bought around 49% of OpenAI, which is ChatGPT, and Copilot powered solutions. Okay, so in theory, Microsoft stock should be flying just as high as Nvidia and Meta and Netflix, because remember, they own 49% of ChatGPT, which is the leading computer and what everyone's talking about in the AI space right now. Sure, they're not majority owner, but they still gobbled up a large percentage of that company, and they're probably also looking to dominate AI in other sectors and segments as well. So Microsoft's definitely one to have on your list for long-term investors and one to be dollar cost averaging in for the long term. Now, something else to be watching out for on earnings is also the commentary around the Activision deal, which is extremely bullish also, and why Microsoft stock should be flying higher as well. Because remember, they just won a huge deal to acquire Activision, which basically lets them acquire Call of Duty, and Microsoft will be the owners of Call of Duty ultimately. We see a clear path forward for wide moat Microsoft acquisition of Activision as a federal judge denied the Federal Trade Commission's motion for a preliminary injunction to halt the deal. Okay, so it's been declined, which is bullish. Microsoft intends to add as much Activision content as possible to Game Pass, which has an estimate of 25 million subscribers. Activision has approximately 360 million monthly active users because of that Call of Duty, and they also own other top games as well. We tend to think the purpose of deals like this is to gather exclusive content. Think of a time in the future where the new Call of Duty game comes out, but the thing is, it's only going to be available on Xbox. And a lot of the old ones, like Call of Duty 2, Call of Duty Modern Warfare, Call of Duty Black Ops, could be, if you just have an Xbox Game Pass, you could have access to all those games for free. However, part of the value of Activision is that it develops games across platforms and consoles, so we expect a relatively light slate of exclusive Xbox content over the next several years. And remember, they also did sign a 10-year deal with PlayStation, that PlayStation and PS5 and the ones in the future will continue to get Call of Duty for at least the next 10 years. Okay, commentary on macro conditions is something else to watch out for. Financial performance within consumers facing area. Another things to watch out for. Keep an eye out for commentary on financial performances with areas like Bing, advertising, Windows, gaming, and LinkedIn. These came back stronger than expected last quarter and meaningfully contributed to overall good results. So overall, Microsoft is going to be extremely interesting to watch this week for earnings. And if you want to see exactly what I'm doing, what strike prices, what option trades, what expiration dates I'm doing, make sure you message me on Instagram. You can see the success pouring through in the group. Okay, we can see massive success, over 7% gains on just one day, and the list goes on and on if we continue to scroll up. McDonald's is going straight up. Here you can see over $666 gain, another $475 gain here. Let's see, we have another $100 gain, another $68 gain, another $60 gain, another $38 gain. And this is all just from one day of trading, by the way. If you want to see the results for yourself and talk to these members of our group, make sure you message me to get in the private trading group. Now let's quickly go over Google. Now we can see in the last week they're down around 5%. In the last 3 months they're up 13%. So same story as Microsoft. You know, they're not flying as high as nearly some of these other stocks that are absolutely taking off this year. Some of the big tech stocks, like, you know, we've already named them, like Netflix, Nvidia, Meta, just to name a few, for example. So it could be a good time to continue dollar cost averaging in for Google for long term. Obviously, they're going to continue to be a dominant player in different sectors like advertising and computing and AI, just to name a few. And in my opinion, Google's going to be a safe stock to be investing in over the next 5 to 10 years. They're also not at an all-time high like the other big tech stocks are at, so it could be a little better of a price point entry. What I'm personally doing is dollar cost averaging into Alphabet or Google stock over the next couple of years. Anything under $150 per share, I think, is a good place to dollar cost average in for Google. If we scroll down, we can also see that their PE ratio is 26, implying that they are a great deal right now. Their market cap is 1.58 trillion. We just did a deep dive in their revenue and net income. It's looking very good for their PE ratio right now, so they're a good deal in the market. But let's talk about their earnings and what we could expect from Alphabet or Google earnings. So here I found a great article. Undervaluation supports a beat and rise case on Google. Alphabet Inc. is expected to report EPS of $1.34 on revenue of $72.75 billion for Q2 2023, representing year-over-year growth of 10% and 4.4% respectively. In the last 12 quarters, Alphabet has beaten estimates more often than not, but recent trend is not in its favor. Alphabet stock is cheaper than Apple, Microsoft, and Amazon with a multiple of 22 and a PEG ratio of 1.4. Do not underestimate the company's ability and potential to leverage AI across its ecosystem, and I believe that Alphabet or Google is one of the best deals in the stock market right now. We can also see in the last 12 quarters, Google has beaten EPS estimates 8 times and revenue estimates 9 times. While that sounds encouraging on paper, the trend is not encouraging. 4 out of the last 5 quarters have seen an EPS miss, while 3 of the last 5 have seen a revenue miss. Alphabet managed to eke out a small revenue beat in Q1 2023 to break a series of 3 consecutive revenue misses. There is no crystal ball in investing, but trend is usually your friend, and it does not appear to be in Alphabet's favor right now. I predict a slight revenue beat, and the EPS beat/miss will come down to how disciplined the company was with its operating, aka expenses, as I don't expect any of the divisions to have had a growth driver in Q2. Advertising and AI, the two main stories, and that's why Google is such a dominant stock, is because it dominates on advertising. Alphabet has always heavily reliant on advertising revenue, and I don't mean that to knock the company, but stating a fact. In 2017, advertising was 86% of the company's total revenue, thanks to the company's efforts in other initiatives, including productivity tools and cloud. That percentage has fallen closer to 79% recently, but that's still a significant part of its revenue, and hence the panic when the company was initially caught napping by Microsoft's aggressive move towards AI. But sticking to advertising prior to the COVID-induced jump of 2021, advertising revenue growth has fallen from 22% to 15% to 9% in the prior 3 quarters. Clearly, we are back to the same trend as 2022 showed, a 7% revenue growth in ads compared to a 2021 spike. Q1 2023 showed the company was still facing the heat on its search slash advertising businesses, and I predict advertising to be a hair below 80%, around 57 billion of the total revenue, which should be around 72 billion. Okay, the AI race is in full swing right now at Alphabet, with the company finally sharing some urgency to the threat that is the search business, not just from Microsoft, but AI in general. And what better way to get Wall Street excited about something than bringing back your co founder to lead an initiative? I will be surprised if the Q2 conference call does shed further light on the company's plans for Gemini and how it plans to integrate AI development with the rest of the Google ecosystem, from productivity apps to Google Cloud and, of course, the search. Lastly, Google Cloud is looking like an also ran, but the division reported its first profitable quarter in Q1. Whether this was a one-off or a trend will be interesting to see. I expect Google Cloud to have a bigger role in the long-term future, but for Q2, I am skeptical if it is mature enough to turn 2 consecutive profitable quarters. Valuation the best among the big boys heading into earnings. Google or Alphabet at the time with a forward multiple of 22 is much cheaper than Apple at 32 and Microsoft at 35. Amazon, by the way, is at 82. The valuation gets more attractive when you factor in the expected earnings growth rate of nearly 16% year over year for the next 5 years. That gives the stock price earnings growth PEG ratio a 1.4. While that is a bit higher than what Peter Lynch would like, Apple's PEG is 4 and Microsoft is at 3. Only Amazon has a PEG comparable to Alphabet here, but it's based on a lofty earnings growth expectation of nearly 65%. The mega cap technology stocks have been on such a magical run this last year that Alphabet at 34% in the last year is the worst out of all the big tech performers, with Microsoft at 43, Apple at 53, and Amazon at 51. Not even considering Meta at over 100%, Nvidia at over 100%, and Netflix at over 100% gains. Given the relative undervaluation and underperformance, Alphabet is going into earnings with moderate expectations, and surprises to the upside on Q2 results, or more importantly, Q3 guidance, may set the stock up for a rally. So again, Google is one of my favorite stocks in the stock market right now to be buying. I think they are one of the best deals in the stock market at $120 per share. So I'm definitely continuing to dollar cost average in and buy Alphabet consistently. When it comes to earnings and short-term outlook for Alphabet, I think it's also a lot of good things going on, as we read in the article. Now, unfortunately, this video ended up going too long and we did not get to go over Metastock and cover Metastock pre-earnings, but make sure you are subscribed on YouTube for the full-length videos, because I am going to be covering Metastock this week. Okay, so we're going to give a big update on Metastock. That's going to be our very, very next video, so subscribe so you don't miss out on that Metastock update. Thank you guys for all the love and support you show on every single video and making it to the end of the video. Also, I did a new post, stocks to buy and hold forever, average annual revenue growth rate, and I listed a few different stocks there. So go ahead and comment below what your stock on this list would be, or if you have a stock of your own that's one of your favorites. Personally, my favorite on this list is Google stock. Okay, so that's why we spent so much time on them in this video. And if you appreciate that, drop a big thumbs up, share this video with a friend. Also, if you want to get into my private trading group, click on success number 9, read through some of those positive testimonials, And then all you have to do is just DM me here at the Daily Stock Market. Now over 206,000 followers, 792 posts at this point in time too. So message me here on Instagram. I'll shoot you over an application so that way I can help you out the best way possible. And then I'll shoot you over my website after that so you can see the prices, what everything entails, and if it makes sense to you, and if it's inside your budget, then let's go ahead and make some money together in the stock market. Thank you guys so much for all the love and support, and I'll see you guys in the next video. Remember, don't buy the market, time the market. Peace.